How did Toronto real estate market react to the interest rate increase? Is it buyer's market now? Hi, my name is Priscilla. I'm a real estate broker in the Greater Toronto area. Today, let's together take a look at the newly available Market Watch report from Toronto Real Estate Board. Like in the previous video, I used two graphs. The bigger one is March performance. The smaller one is one more month ahead in February. So when we compare the big to the small graph, we see month over month change. Together, we study 5 parameters. Under each one of them, you see a percentage. That's the year-over-year change for the same observation period, March. So first, let's take a look at the parameter that everybody pays most attention, average sold price across the whole GTA for all property type. So in March, we recorded 1.3 million. This is a 2.5% drop from February's 1.33 million. Together with property price drop, we also see 30% decrease in the transaction volume. Comparing with last year, March, we almost hit 16,000 deals. In 2022 March, we had slightly below 11,000. But does that mean the market became cold? Is the market going to remain inactive? We're going to look at another set of number before we draw a conclusion. Starting from December, we saw the property price continue increase. We had a very big spike. That was due to the severe shortage of supply. But this situation improved quite significantly in March. So if we look at the new listing, comparing with a 50-60% drop in previous months, comparing with last year, we saw it's only 12% down. And active listing is even more obvious. It's almost on par with 2021. Since the end of last year towards the first half of February, bidding was all over the place, and sellers often receive 10, 20, even 30 offers on offer review date. But this situation has improved quite significantly starting from the second half of February. So there's still multiple offers, but the number of offers became single digit. So from Frontier, we can sense the competition among buyers is much less fierce than the end of last year. But we cannot draw a conclusion to say it's already the buyer's market, because if we look at the inventory, we saw that in February was 0.8 months inventory. This month, it did improve a bit, but it's still just 0.9. Months of inventory shows that carrying on current selling speed, how fast the inventory will be depleted. So when the number is below 1, we say that it's a seller's market. But if it's above 1, it's buyer's market. I would consider from 0.9 to 1.1 months inventory, it's a balanced market. So I would say now we gradually, slowly turn from seller's market into balanced market. Okay, so this is the big picture about the whole GTA. But not every city is the same. Let's take Markham as an example. So when we look at Markham, we can see that in February, the average sold price is 1.56 million, and this month is 1.43 million in March. So that's like 8% decrease. So comparing with the whole GTA 2.6% drop, this is more drastic decline. In terms of supply and demand dynamic, we can see it's 1.1 months of inventory, and this number maintained the same from February to March. So again, 1.1, I would still consider it's a balanced market, but comparing with the whole GTA, the buyers has relatively more properties to choose from. I want to show you some more data. Here we're looking at the average sold price across the whole GTA for the past three years. I start with 2019. That's a normal year before COVID hits the market. So you can see 19, 2020, and 2021 towards right now, the 4 lines didn't even cross except for April 2020. That's when the lockdown started, and that's the only month the price really hit the bottom and crossed with 2019. Otherwise, every year there's a huge step comparing with last year. This is hugely due to government launched the very low interest rate right before March 2nd. our prime rate was 0.25%. That's the lowest in the past 50, 60 years. So with that, the price went up high for the past 2 years. It went up altogether 50, 60%. We saw this a spike from the end of 2021, particularly it jumped from December 2021 to January this year, and then it further has another spike in February. So that was 1.33 million. So we really shouldn't jump into conclusion now the market start to have a sharp decline. It's just, from this chart, we can see we still have a long way to go back to 2021, leave alone earlier years. I further introduced another graph. We are looking at the number of transactions. So again, this is for the past 4 years. We saw that in the chart I showed earlier, that decline in terms of volume in March. When we compare with 2021, seems like there's a 30% decrease. But don't forget, when you look at 2021 March, we had a historical high, almost close to 16,000 deals in that single month. That is the peak for the past decades. Even though it's 30% down, we're still close to 11,000. That is the second high in history. That is how strong the market activeness is. So I think in the future, what's going to define how the market is going to turn is between the competition for two forces. One thing is the higher interest rate and the more strict non-resident speculation tax rules. That's going to slow down some of the purchase from speculator or some of the investors. But the other side is the number of the incoming new immigrants. In previous video, I talked about 2021, we welcomed 401,000 new immigrants to Canada. And that's the highest in the past 100 years. But this year, the number is predicted to be 410,000 to 420,000. So last year's record is going to be broken again. So is the new regulations slow down more purchase, or the newcomer is going to release more accommodation needs? Let's wait and see. Okay, so this is the end of this video. If you have any recent for sale and purchase plan, please feel welcome to talk to me. We're gonna customize the strategy just for you. Looking forward to connecting with you soon. Bye-bye.